parent company Meta has announced the biggest tech layoffs so far this year. The company has sacked 11,000 employees, which amounts to about 13% of its workforce.
This is going to impact thousands of people, not to forget the sentiment and the manner in which it's going to affect the market.
कोविड महामारी की वजह से जब जीवन और बिजनेस ऑनलाइन दुनिया की तरफ ज्यादा शिफ्ट हो गए, तो दूसरी बड़ी कंपनियों की तरह मेटा ने भी काफी नियुक्तियां की थी।
11,000 out of 87,000 employees, a whopping 13%. This is what Meta's first broad job cuts in the 18-year-old history of the company looks like. Not just that, Meta is also extending their hiring freeze through Q1, which means they'll be hiring fewer people till at least March of 2023. Founder Mark Zuckerberg made the announcement, which is largely expected considering the huge amount of money the company has lost recently, going by the revenue and earnings report. But what Zuckerberg also did say, in fact went out to say categorically, is that I apologize. And there's a reason why this apology was well deserved. Now, since the metamorphosis of the company, if you can really call it that, when Zuckerberg rebranded Facebook, the company has lost 70% of its value. But is it really just in the name? Can just renaming or rebranding a company lead to one of the biggest wipeouts that Wall Street has ever seen? To get an answer to this, let's follow the money. But first, before I get into the details, please remember to like, share, and at the outset, let's get one thing straight. Yes, tech companies as a whole have been facing a tough time. Top tech companies, even Apple, Alphabet, Amazon, Microsoft, Tesla, and of course Twitter has been laying off employees as well or freezing hiring. But out of the other four companies who were up there, right there with Meta on the list of the over 1 trillion market cap, Apple, Microsoft, Alphabet, Amazon, they're still the most valuable US businesses, despite the severe slowdown in the tech industry that we've seen in the recent months. So what happened with Facebook? Facebook's plunge has been way more than any other company. Like Google shares have also lost about 35% in the past year, while Microsoft is down about 29%. But over the same period, Meta shares lost more than 65% of their value. So, what's different about the Meta story? The difference is a number of Meta's woes seem to be self-inflicted, something which even Zuckerberg has taken accountability for in his message to those who've lost their jobs. Zuckerberg believes that the future of the company isn't just social media, but instead the immersive metaverse has turned out to be a risky affair, and Zuckerberg continues to stick by it. Zuckerberg has said that he believes the investments in the metaverse plans will take about a decade to yield positive results, and in the meantime, the company would have to reorganize and trim teams, cut costs, and brace for a downturn. In fact, one of Meta's shareholders earlier said in an open letter that the company must cut costs and streamline by cutting jobs and capital expenditure as well. Altimeter Capital Management, the shareholder, said that investor confidence has been lost since Meta was increasing spending and making pricey bets on the metaverse, something which is of course yet to really give any solid returns. Zuckerberg's ambition to make Meta a metaverse company does come at a high cost. It's spending $10 billion per year on hardware and software tech for the virtual reality experience. And they've hired thousands of employees to help build the metaverse. Now, even Zuckerberg says that it takes about 10 years to start yielding results. That's $100 billion expense on this project alone. This at a time when Meta's revenues have declined for the second consecutive quarter for the first time ever. Hurt majorly by falling advertising sales, which, remember, is its main source of revenue. In fact, the Reality Labs unit of Meta, which works on this augmented and virtual reality, has been reporting staggering losses, pulling down the whole unit. It lost nearly $10 billion in these 10 months in 2022 alone. And these losses are only expected to increase in the next year as well. This has led shareholders to push for the company to focus on the company's core businesses. But Zuckerberg remains bullish on Metaverse. Even in the statement he released while firing 11,000 employees, Zuckerberg highlighted that the company's long-term vision is to take Metaverse forward. By the way, Zuckerberg himself is taking quite a risk personally as well. He himself has lost $100 billion after Meta's earnings missed the mark, more than any other billionaire in 2022. But in his own words, he believes Metaverse project is fundamentally important to the future. So apart from the high-stakes gamble, what's pinching Meta? The team at Moneycontrol did some research and found three main factors. The first one, as Zuckerberg has himself taken accountability for, is Meta was unprepared. When COVID began, there was a sudden surge in e-commerce and big tech, and there was more revenue, more money to be spent, and Zuckerberg made the decision to significantly increase Meta's investment. Like most other tech giants, Meta grew during the peak of COVID lockdown and even added over 25,000 employees during 2020-2021 period. But this acceleration started to slow. The economic forecast became gloomy and interest rates started to rise. Zuckerberg's expectation that the big tech boom would continue unabated was shattered, and Meta's revenue turned out to be much lower than what the management expected. Meta lost $230 billion in market value in February itself, which was the biggest one-day loss in the history of any US company. So of course, their investors became uncomfortable with this huge expenditure with little return to really show for it. Second, Meta's flagship platform, Facebook, has been facing revenue challenges due to changes in Apple's privacy policies, which have curtailed the ability of social media platforms to target ads. Meta had already said that they expected to lose about $10 billion in ad revenues as well due to these privacy changes by Apple, in which it allows its users to opt out of company being able to track users across apps. And the third reason, which is pretty plain and simple, it's competition. Specifically from TikTok, young users are flocking to other social media platforms like TikTok, which is why Facebook is also now focusing so much on Instagram Reels and Stories. TikTok is driving engagement amongst Gen Z audiences and content creators, something which has hit Facebook hard. Of course, who's to say Zuckerberg's Metaverse bet isn't going to take off in the future? After all, the Metaverse market is expected to grow over $650 billion in the next 3 to 4 years, as per some estimates that have been going around. But yes, in the meantime, layoffs, restructuring is where Meta is trying to salvage funds to go deeper into this futuristic gamble. So, hope this video gave you some interesting insights on what exactly is happening inside Meta. Many actually at this moment saying that these 11,000 firings could just be the tip of the iceberg and there could be more coming up in the future. Until then, stay tuned to Moneycontrol to get all your details, and in case you are one of those or you know anybody who's recently been fired, not just by Facebook but by Twitter, by Jews, you name it. Firings and layoffs seem to be the flavor of the season at the moment. We've done a separate full interview telling you what exactly should you do next. So catch that up as well. For now, thanks for watching. Bye-bye for now.